the Biden administration targeting China EVs. So the Biden administration is gearing up to announce, supposedly this week, an increase in tariffs on a range of Chinese goods, including a big hike on electric vehicles. Now, the Biden administration had been reviewing the Trump era, tariffs, and they had for the last year or so. It's been about a year since the Biden administration ordered this review, and the recommendations have come back. And in essence, what the expectation here from markets is that the Biden administration is going to quadruple the tariffs on Chinese electric vehicles from 25% currently to 100%. So this is pretty severe. Quadrupling the tariffs. Obviously the move is designed to curb the influx of cheaper Chinese, electric vehicles into the U.S. market. They're trying to protect domestic manufacturers from what we would have to say is intense price competition. Now, there's a few things, and I want to talk about that intense price competition here in a minute. We'll talk about the BYD's Seagull, which is a pretty aggressively priced, very aggressively priced vehicle that they're putting out. But for investors now here in the United States, this could mean potential growth in U.S. EV companies because they face less competition from Chinese imports. It could also lead to higher prices for consumers, however, and I think even more problematic, slower adoption rates for EVs domestically because the prices won't be dropping as quickly due to these tariffs. So here's the new BYD Seagull. So BYD, this is you can actually trade BYD stock on the stock exchange. It's a 5-letter ticker, which means it's an ADR, which means it's a American Depository Receipt, which means that it's not it's based somewhere else basically, and here's the deal: this new BYD Seagull electric vehicle is pretty impressive. You can fast charge from 30% to 80% in 30 minutes. It's being called the Lamborghini Mini because a former Lamborghini designer, Wolfgang Egger, led the project. They launched this company BYD, which is, by the way, the largest EV company in the world. It outpaced. Let's say it this way: it outpaced Tesla in Q4 of 2023. It looks like Tesla's coming back, but we'll talk about that in a minute. But there's a great competition right now between Tesla, which enjoys the prime mover benefit here in EVs, and BYD. And BYD, by the way, this is a stock that Warren Buffett and Charlie Munger had invested into. They don't own Tesla, to my knowledge. In fact, I don't think they own it at all. They chose BYD. That's kind of telling. That kind of tells you where Buffett expects to see the growth in the EVs. He kind of picked a winner, is what he thought. Anyway, BYD has been very aggressive. They've launched their Seagull EV in South America. It's going to be known as the Dolphin Mini there. It's going to have a starting price of around $20,000. And, and Washington obviously is trying to protect the U.S. automotive industry from low-priced Chinese electric vehicles. This vehicle, by the way, is selling in China for around $12,000, and all reports are that this vehicle is well made, and that it rivals U.S.-made electric vehicles that cost 3 times as much. So, this is a problem. This is a problem for automakers. It's not a problem for consumers. It's a good problem for consumers. If you have electric vehicles that are falling in price because technology and all of this, that's not a big problem for consumers, but it's a big deal for Michigan. It's a big deal, and it's an election year, by the way. Don't forget. So we've seen several things. We've seen the Biden administration mention he's going to slap bigger tariffs on Chinese steel. That's a play for Pennsylvania, which is a swing state. He's talking about protecting U.S. automakers here in the U.S. That's Michigan. That's a swing state. So you got to do the math. You got to realize this is an election year. Same thing with cannabis, right? Cannabis is expected to net young voters, and so if they reschedule it, at least that's going to be viewed positively by some voters. So I mean, this is electioneering, of course. So this may not last. This may be an election year ploy, right? That could go away after the election. But either way, this aggressive push by Beijing we've heard Tesla CEO Elon Musk warning about this. I put out an email to you that showed a quote here that said, if there are no trade barriers, this is Elon Musk, if there are no trade barriers established, they will pretty much demolish most other car companies in the world. They're extremely good. He called Chinese EV makers the most competitive. He says they will demolish global rivals if they don't immediately erect trade barriers, right? And you can see here the costs of these BYD Seagulls. Starting price, all based upon the range, the range of how far they go. So the active model is, will go about 190 miles on a charge. The free goes about the same. It's a little higher, has a few more bells and whistles. And then the flying edition is $12,000, and it goes the longest. That's what most people want, and it's not that much more expensive. If you look at how Tesla has been competing against BYD, you'll see they're here in the green and BYD is in the blue. And for quite a long time, BYD was trailing Tesla, but that changed. In Q3, they were neck and neck of last year, and then in Q4, BYD blew past Tesla. Now, it looks like Tesla, was okay in Q1. It retook its position, but both of them were down. So these two companies are the largest electric vehicle makers in the world, and as I mentioned, they're vying for the crown here. And Tesla needs the United States. If Tesla is to succeed, it needs the United States and Europe to erect trade barriers against the innovation of Beijing. So Beijing is able to create products that are innovative and that are, in some cases, 3 times less than what the U.S. can do it for due to labor costs and other input costs. And so the only way for free trade America to maintain its standing is to erect trade barriers to the tune of 100% tariffs upon cheap Chinese imports. Now that ultimately creates inflation. That ultimately boils down to the fact that you and I as consumers have less choice, and we also have to pay more for pretty much similar things. So it's a strange thing for a country that boasts and brags and braggadocious and beats its chest about how it's free trade, but then it's also, using tariffs to stymie innovation, right? It's kind of a strange thing, isn't it? Well, anyway, all that argument aside and all that strange confusion aside, let's just consider the companies that could benefit from 100% tariffs on Chinese EVs, right? Tesla, obviously, is going to be a primary beneficiary. And Tesla could see reduced competition from BYD, right? Potentially increasing its market share here in the United States. GM and Ford, both of them are, not doing so well. They have heavily invested in electric vehicles. Many of them are scaling back, A, because the demand has come down, but B, in Q1, but B, it's because of Chinese EV makers. They're blowing past the competition here, right? And so if they can put up a big wall here in the United States and keep out cheaper cars, well, then they can continue to, not have to drive down their costs so fast. They can continue to, charge more and not worry about input costs as much. And, for consumers, that's a loss. We want companies to constantly be trying to drive down prices if it's, in an ethical way, of course, not in some unethical way. But, but also this could help Ford, which, by the way, loses over $100,000 per EV in Q1. Can you believe it? Ford lost $100,000 for every electric vehicle they sold in Q1. And now apparently they're cutting battery orders. So it's been a really tough thing for Ford and GM as they've tried to go in and compete not only with BYD but also with Tesla. And then you also have companies like Rivian and Lucid. These are newer U.S.-based EV manufacturers that they could benefit, obviously, from the reduced competition. They could gain a greater stronghold as they scale up production. Then you also have the Biden tariffs will also affect other sectors, including some critical minerals and clean energy. So this also could impact these sectors. Obviously, it could mean increased costs in the short term, but long-term benefits could be domestic production of some of these things scale up, and that's obviously the goal. The goal is to get the United States less dependent upon China and more dependent upon its own domestic production of some of these critical minerals and also of clean energy, right? Now, the Biden administration has announced, or at least it has suggested, that it's going to exempt solar panel machinery. And because it's kind of a strange thing because they're trying to balance the idea that they want to see more adoption of electric vehicles. They want to see more adoption of clean energy. But at the same time, if they don't put up trade barriers to China, well, then everybody's going to buy Chinese clean energy, Chinese EV, Chinese everything, So the United States has to, drop the free trade mantra and it's got to get aggressive and slap tariffs on everything and end up charging us more for the things that we all buy. Now, companies that could benefit from this aspect of the Biden plan would be companies that we've talked about before. Albemarle, right? A big producer of lithium. That's used in batteries for the electric vehicles and energy storage systems. They could definitely benefit from increased demand for domestic, domestic demand. First Solar, which has already been a big beneficiary of solar policy here in the United States, they could continue to benefit from these tariffs on foreign and solar goods. Enphase and SunPower. These companies provide solar technologies and energy solutions. They could see increased demand domestically. And so, it's a double-edged sword. The tariffs, on one hand, you can understand why, Washington would put up tariffs to prevent China from kind of cannibalizing our markets here. But at the same time, you also see that they lead to increased costs. And also the other thing is the potential retaliatory actions. China obviously is going to have a say about this, and they may not take this sitting down. I don't expect them to. They might slap back with, their own kind of tariff, and we don't really want that. We don't really want that kind of adversarial relationship to get more adversarial. So we'll see. Time will tell. Now, looking at a couple of these stocks, in particular, Albemarle, sitting down here in its extreme value zone. This is a dividend aristocrat, huge producer of lithium. Lithium's been an overproduction supply, and demand has come down compared to where we were before, and also supplies have really caught up. So we may be in a surplus of lithium, according to some economists, out to 2028. It may not be that long, but regardless, companies like Albemarle, which create or produce lithium, are trading at some pretty interesting levels. Here in this case, the Albemarle, the dividend aristocrat, trading more than 60% below its previous peak set back in 2022. And then you also have Enphase Energy, one of our favorite solar energy companies, trading down in that extreme value zone, down from its 339 peak back in 2022 as well. So interesting to watch there. We'll see what happens. We'll keep our eyes on that story because there's a lot that could happen. And in fact, maybe nothing happens. Maybe we don't fully see everything play out the way that it's been laid out here. But we'll continue to watch it.